Hey traders, Raghee here, and in this free recap video we're going to follow up on some conversations that we had yesterday, and that is the concept of a time-based exit. In other words, if we have an event on the calendar like we did today, and the event that for me was the most important wasn't necessarily non-farm payroll, although that was a big number, but it was actually Powell at 10:15 a.m. Eastern. And I think the way in which the market responded pretty initially negatively and really muted response to a huge NFP number really just emphasized how much market participants were waiting for what kind of tone Jerome Powell would have. So yes, it was a huge day for jobs, and Jerome Powell for sure kick-started the hopes of bulls everywhere. And look, I call this a crash up, gang. We had another crash up. This is not the beginning of what we would consider to be an uptrend. These are not healthy moves. And I don't want folks out there who are long getting upset. Gang, this is not how an uptrend actually starts. This might be how the market transitions into a choppy sideways move, which means yes, perhaps a near-term bottom could be in. Again, that's a big perhaps. But when the market crashes up like this is certainly 100% fear of missing out. And it happens with any significant move, right? Sometimes those FOMO traders, like here, were rewarded because we had a little bit more follow through. Because look, FOMO traders are the ones that are going to end up, like if you break this candle into thirds, if you break any large candle meaning the upper end of its historic daily price movement range, if you break it into thirds, your FOMO players, your fear of missing out, they're going to be at the last third of the trade. So they get long near the top, and then the market just sort of dribbles a little bit higher, and they're happy, right? Until this happens. Remember, momentum traders have very little tolerance for movement against them. Hence, they're momentum traders, right? So what happened with the down day? Momentum traders get scared, break this into thirds again, and momentum traders, if they decided to go short, got short down in that bottom third. Well, what happened? They got absolutely crushed today, right? So if you find yourself entering at the top of big moves to the upside and the bottom of significant moves to the downside, realize you're the first to get crushed, right? And I'm even going to be a little bit more harsh than that. Rightfully so, because that's a bad position. I don't want to waste your time. I don't want you wasting your time also getting in the top of an up move. Now, you might say, but Rog, this could continue higher. That is very true. That is very true. But if you had a true bullish take, Jerome Powell and what could be, maybe, a neutral to dovish Fed in the near future, that can't be your only reason for being long, because if that is the only reason that you bought at the top of an uptrend, the moment that news becomes old, the moment there's not a new reason to be buying, the market's going to want to roll over, right? I think we could probably see a little bit more movement to the upside on Monday, but what we've been doing in the room is positioning for shorts, because this is a correction of the downtrend, and I'll talk more about this in the premium video, but I want everyone to understand this is a significant correction. It's even more, I think, clear when you look at the NASDAQ reaching the 21 EMA and the 34 EMA on the low. And this is what we do. We go at the money puts with 30 days. I mean, I keep it really simple. And why do we go the options route on a move like this that I call a crash up? The reason I go with options is we could get that sort of dribble, that sort of trickle effect for another session or two or three or whatever before the market heads back down. All right. So that way I don't have to limit my trade to some sort of price-based threshold for validity. I can use number of days left to expiration, or I can also use the premium. Right? I could also use premium value, which I'll typically kind of use a 50% premium value, right? That's what I like to use. So I don't have to have a price-based threshold by way of a stop loss. I could use number of days, or I could use a 50% premium threshold. So it basically frees me up to handle a little bit more latitude, handle a little bit more wiggle as the market kind of hunts and pecks for where those where the exhaustion is and the sellers come back in. And why am I so adamant about the sellers coming back in? Because we have weakness globally, gang. It's not just in the U.S. This is a downtrend. Take a look at the movement since October. The move that we've seen since December, much of this was end-of-year rebalancing, deploying capital and rebalancing assets. I still don't believe we've got full participation back for 2019. That'll happen on Monday. And here's where I'll say, if on Monday we get a little bit more movement higher, if we can close near the top of the range, that would actually bode well for a little bit more sustained bullishness. But if on Monday we come back to the market, even the Sunday open, and just see the full participation that we typically see the first Monday of the new year, send this market lower, gang, there's your confirmation for the downtrend. There's your yeah, right reaction to Powell. And the reason I have this circle back here on the chart is I wanted to remind traders in the chat room that, gang, Powell's done this before. My trust for the things that this man says are very low because he's mismanaged the message. I'm being very kind with that phrase. He's mismanaged the message for quite some time. And I don't see that suddenly now he's signaling to the market that the FOMC is done. Okay, so I have a lot of doubts about this. Doubts plus a correction plus what I feel to be a downtrend is just an ideal time to start thinking about where resistance could come in and how we can re-engage the downtrend. And so that's what we'll be doing. In the premium video, gang, we'll talk about gold, we'll talk about bonds and the strategy that I was teaching you all yesterday in order to take advantage of a runaway market. We'll also talk about a couple other markets in Europe that I've got my eye on. France, Germany, Italy. We'll talk about Apple, Nvidia, the Australian dollar, and what is happening with the US dollar versus Canadian dollar, which has been a terrific trade for us. All right, gang, have a terrific weekend. I'll see you in the next update.